Action, everybody. That's the cue. Welcome to a little bit of a weekly market review here on Sunday. We're going to go over Thursday and Friday's trades for last week. We're going to talk about kind of what's to come for next week, our expectations on the market, where it can go. Probably looking at both bullish and bearish biases as well. And lastly, we're going to touch on kind of what my basic strategy is, how I approach the markets, coming to the charts, kind of looking at a blank canvas, if you will, and how I attack the market, how I get analysis, how I get a bias, what I look for to enter the trades. We go from there. So first and foremost, let's start with the charts for last week, Thursday, Friday. Zones, for the most part, I keep the same the whole week, if not the week following, essentially until price has created enough structure to where I need to make that adjustment. I'll add minor zones in, like these little lines, but my major zones are these pink areas, or purplish areas, sorry. And that'll tell me if they're kind of stronger or weaker, if you will. So coming to the charts here, we can even go on a little bit of a replay for you guys. So right here is Thursday, 10 p.m. pre-London session. Let's get out of this bar review. As you can see, I have this support zone created from looking left, price action here, an inability to close below our 2860s area. Your 10 p.m. candle closed bearish at that zone. Therefore, we need to drop down another time frame to see if we can get some more information. Your 10:30 to 11 30-minute candle closed bearish above, respecting that zone. This 15-minute candle from 10:45 to 11 closed bearish, but respecting that zone. And this is the tough part about gold, is you have to drop down potentially to such low time frames where it requires you to respond really fast. And if you're not pre-planned, if you're not expecting this, you will miss the move, or at least not get in at that favorable price. 5-minute time frame, here we are, hourly close, so we know that it's respected. We also know that it closed bearish. So in that entire next 60-minute candle, it can make a top wick and flip and drive down, which is why we need some more structure, which is why we need more price action before we enter. I sat on my hands until we got a little bit more structure. Where are we here? Sat on my hands until we get a little bit more structure. Once we created this bottom, once we created this low, this potential support here during a high volume time, London open coming into play, this 12 o'clock candle, I ended up entering a long position with stops below here. And by the time I got into that position, most likely on the 5-minute candle here, we were right here. So my entry position was here. Stops would have been probably below that. That would have been my first break-even target there at about 2866. Understanding structure, understanding we need to break. That's my second, and that would have been my third overall target. For a 1 to 5, give or take, I was on the lower time frame, realizing that we couldn't break this 2686 and would require a deeper pullback. So I ended up cashing out profits at about 20 pips for about $500, and then didn't end up getting into any of these moves. A little later, I believe I went to bed, and if not, just missed it based on how we started to move price action wise. So as you can see, a little bit of a tricky price action, no bottom wick here on that 12:30 30-minute candle, and therefore fairly tricky to catch. Typically, a lot of candlesticks have a top and a bottom wick. Knowing that probability, knowing that statistic, I like to wait for one of those to happen. If I'm looking for buys, I need that bottom wick. That'll also provide me a little bit of a stop loss area. So multi-purpose there, and unfortunately didn't get it. Looking back, some structure was created here on the 30 minutes, so a new low. I like trading near new lows. So you could have got this top of zone push here, stops below a good 30-40 pips by the time you entered. So that would have been a good follow-up trade there. considering I had taken some profits and still had another kind of bullet to play with there. But that was my Friday, London session. Then Friday morning, you had NFP news, which was this crazy 530 candle from top to bottom of about 180 pips. So unless I'm at an area, unless I have an entry down here prior to news and we are a substantial amount of pips away from my entry, I typically don't enter news, especially certain events like NFP, CPI, PCE, things like those, very high impact news. I will tend to stay away from. Look for that manipulation, look for that direction where I can have a little bit more confidence into where the market's going, and then I will simply ride the coattails, try and catch a little bit of that bullish or bearish push after the data's been absorbed. So news release, NFP on Friday. I woke up a little late, so I believe I woke up in a 6:15, 6:30 candle. This was a great indicator here at 6 to 6:15 on the direction of where gold is going. We are at this support area that we have marked out previously. That price was unable to close below, so it was our 1, 2, 3, and potential fourth reaction from that area. So very strong. Once you got this 30-minute candle printing in your direction, that's your cue, if you're on this time frame, to start purchasing, to start riding that bullish momentum that's going to come. Like I said, woke up a little late. I came to the charts about 6:15, 6:20. So seeing this, had to sit on my hands. We fully got that closure above that potential rejection zone right here. So as you can see, looking left, we fully closed above this 2870s area, these other rejection points for price, looking for a bottom wick and a drive, and that's exactly what we got. Unfortunately, as mentioned previously, gold moves very, very fast. So best entry would have been on your 1 minute here, not typically a time frame that I love to look at. You can find yourself kind of getting trapped in there and getting stopped out fairly easy. That being said, beautiful little retest to this area and a push. I wanted this 30-minute candle flip, which was right here. So let's mark the 30-minute candle flip, stops below, and let's look at the 5-minute and see what we got. So I like to wait prior to entering for a candle in my direction. The previous candle was in fact bearish. So you have two options. Either one, take an impulsive move at the flip, assuming that's your bottom wick, or wait for potentially a 5 minutes in your direction. I ended up missing the flip, getting in at the break of the high, having this initial push once again, starting to stall in that 1 minute time frame. Understanding that we are 150 pips away from our nearest bottom, our nearest support created. I know that gold likes to pull back, and sometimes the pullbacks can be vicious, especially if you don't have a lot of structure in between those zones, which we don't. Again, 100, 150, 180 pips between structure. So sometimes price just needs to accumulate a little bit more, collect the orders before that second batch gets released into the market. So I ended up taking a small 15 pip win here, or might have even taken a bit of a break even there. That was my win in New York. So yeah, grabbed that for just under 20 pips, and then went down to the lower time frames. Here you got this 5-minute bullish candle in your direction, creating more structure. So now you have a 15-minute bearish candle pullback, and in the 7 o'clock hourly candle, you're looking for that continuation, which is right there. So 7 o'clock wick fill and drive, waiting for 7 to make that pullback, that lower wick. Here you have it, a fairly deep one, right to the previous bottom of the low for 30 pips, dropping down to the 1 minute time frame. I missed this entry here. It was right prior to the the 1 hour closing, so I didn't want to enter. I did in fact enter here. Stops below this structure on the 1 minute. Again, got that 23 pip push, put my stops to break even, and on the next hourly there was some minor news release, and this 1 minute candle pulled back a good 40 pips and took me out. So now I have 1 win and 1 break even for the session. Entered here again after the 1 minute closed in my direction. Third bullet for the day, not something I typically throw at the markets. So as soon as I got those 5, 6, 7 pips, went break even, got stopped out at break even, and you got this push, top of zone, a little bit of a pullback, retracement, retest on the lower time frames, and then a continuation drive before we started to melt from new all-time highs here. So Friday was a bit of a tough session. Overall, I walked away with a green day, which is always good. In my entirety of last week, didn't have a single red day, had a handful of losing trades, but walked away from that day or from that session being overall positive, which was great. So last week, looking at the charts here, we finished off with $1,247 US for the week. Like I mentioned, for those of you who watched my last video, going to be a little bit more of a slow and steady climb for this challenge due to me selecting an FTMO swing account as opposed to their general account. So I am constrained to about a 2.5 lot. Typically I would be trading about a 5 lot. So this 1250 would be about $2,500, which would be substantially more, about 100% more. So is what it is. I'm not able to switch back to their general account until I've passed this challenge portion before moving on to the verification side of the challenge. So yeah, that's that. Those are my trades for kind of a Thursday night London and Friday morning New York session trades. We're going to look at more of a holistic weekly approach here and see what we can expect from potentially next week. So let's get into that. Looking at the weekly time frame here, another very strong bullish candle close. Weekly candle body is about 600 pips, and weekly top to bottom is about 1100 pips. So a substantial move in the market last week. Dropping down to that daily time frame now. The daily did in fact close bullish, but not loving the structure. You have more of a rejection candle, and what I mean by that is the wick to the top side is much greater than the wick to the downside and the close of the body. So you have about a, what is that, 250 pip rejection wick. You have about a 50 pip daily candle body close. So honestly, what I would be expecting is if this next week doesn't close bearish and we end up coming down first, you can expect this daily candle, if we're looking for sells here, to reject the 2870s area, somewhere in here, this previous structure where we have previous resistance, and fully dive down here to 2840. So that could be your bearish prediction. So you have this drive somewhere in here, some structure on the 1 hour or the 4 hour, and a push all the way down before starting to get that weekly wick fill and create new all-time highs. So some good key areas for buys would probably be later in the session, this area here, or once you get some structure above your 2860s. You can also look for those sells from these areas as well, depending on when you create that top wick, when you create that bottom wick in the market for the weekly time frame. Looking on the 1 hour, pull up to your 2866 and a drive down. That would be your first area for sells in the lower time frame. Second area is 2870 if we can't break above, expecting a bit of a bottom wick to be formed for the daily and for the weekly time frames. Bullish on the other hand, if you were expecting just that minor bottom wick pullback and kind of a continuation, you want to catch the flip of the weekly right away. Again, it all depends on how structure is being formed. This area was a potential support created at 2855, so that can be a potential area moving forward for next week. If you get some structure, some accumulation there, a bit of a manipulation down and a snap above, you can expect some longs from that area. If you miss those, You can wait until we close above, come back for that retest, and an extension you can enter here. So there would be a TP, there would be a TP. So that's a potential expectation. Or if you want to fully wait until we do close above your 2870s area and accumulate there for those short-term longs and new all-time highs being created. So that's a bit of my next week in review. Overall bullish trend, weekly turned bullish, closed very strong bullish, expecting more bulls for next week, but understanding we're in a bit of a potential pullback phase. The market snapped back below these highs. If we close below this support, we should come down and retest these lows, if not make a new low. So understanding both potential biases, and just got to sit on our hands and wait for price action to give us a confident signal and give us a confident direction. So that's it in regards to next week's expectations. Let's talk for the next 2 minutes quickly about my basic strategies. So we're going to get away from, let's go to this guy. Let's go to new provider, and let's just remove all the drawings. So essentially, I am a price action trader. And what that means is I don't use indicators. I don't use EMAs, anything of that nature. I simply use my eyes in regards to how price is reacting on the charts and at what price these candlesticks are reacting at. So it's a combination of A, looking right at the price, psychological whole round numbers, B, looking left at what has happened around those prices and how structure is formed around certain prices in the market, how it's reacting, and thirdly, candlestick anatomy, how the candlesticks are forming, and trying to break down and dissect what that means. To me, candlesticks are a reflection of what goes on in the market. It shows you when the candle opened, it closed, its high and its low, and essentially gives you direction. How I like to trade is based on support and resistance zones, and then simply candlestick confirmations. Ideally, I'd like to have multiple I have a bullish trend that I have determined from candlesticks printing from the bottom left of my screen to the top right of my screen. As you can see here, this is a bullish trend on the daily time frame. I would be looking for buys. I would then scroll out, mark up my charts in regards to support and resistance areas. I know that that was a previous resistance zone. This was a support zone. I see that we also have a minor one here, and in these zones it becomes a little bit choppier. So this is what I would mark up on my daily time frame. As you can see, just tops and bottoms, essentially areas where price is reacting to. Now looking left, I would round these again to whole numbers. As you can see, that was already very close, so a simple round for psychological reasons. Then you would have to drop down to your lower time frames and adjust. See if there's any more minor zones that make sense here. And look, just adding in these areas, you can see how price reacts beautifully. You have the zone here that was respected. You got a close above, a pullback, and a continuation. So just right here, you can see off one or two horizontal lines how well price respects looking left. Once I have this pullback and I'm looking at getting entries in these areas, I wait for a candlestick in my direction because I don't want to wait a full 4 hours, but I got that 4-hour pullback into the designated zone. You would have to then drop back into your time frame. Wanting a candlestick to close in my direction, here you go. You got a candle closing in your direction, and that your bottom or your low is close, and you're taking entries after a bullish candle. So that is essentially what my strategy is. A combination of candlestick analysis, looking left, support and resistance, and ultimately waiting for a candle to close in your direction, giving you that confidence to enter. Now, that being said, looking at this type of strategy, requires a bit of a bit of tailoring, if you will, right? It sounds super simple. It sounds easy. As you saw, when it comes to live trading, price moves very fast, right? So it's easy to kind of be on a 15, a 30, a 1 hour candlestick and say, oh, I would just enter there. And the trade would have worked out, right? But within that hourly candle, there's 60 minutes of price going up and down, breaking highs, breaking lows. So it's all about structure. It's all about putting your stop loss in an appropriate area that makes sense, right? Here, for example, your entry's there. If your stops are there, that's 100 pips. That's not in my plan. I can't afford to risk 100 pips, right? So that would require me to be dropping down to lower time frame, seeing the different structure, waiting for that retest and attempting to get into the market at an area that has already been retested, and I'm essentially trying to get the extension of that push. So I know for sure we're bullish. I know we've closed above a zone. I know we've gotten a pullback, and I can assume with the volume in the market, I'm going to get that extension without a pullback. Now, if I enter the market on the impulsive first initial break of structure, that's where I'd put my stops to break even a lot sooner, a lot quicker, or maybe even take partials sooner, knowing that we still need to retest structure. So that is a super, super basic example of how I look at the markets. Let's go over one more example here. So let's go here. Okay, currently looking like a bit of consolidation from left to right. Overall, we are bullish on gold here, as seen by the candlesticks coming from the bottom left of my screen to the top of the right screen. We have this nice little push here. We snapped back for a deeper pullback, retesting this structure. So that's one zone. We then got some structure there. We had our resistance here, here, and here. So super simple, dissecting on the daily, dropping down to the 4 hour. You can start to make these adjustments. So this is that 4 hour structure. It seems not to be able to break. There's one or two reactions there, almost a third, fourth, for sure dropped into here. So now let's see if we can get some direction. This daily closed bullish, pretty indecisive. So let's see, 1 hour time frame, where do we get the biggest reactions? Well, right here, it looks like it's starting to react. So if we can come down a little bit, tap into here, maybe we can look for buys this way, something like that, with this being another TP area or some area that we want to secure partials depending on this zone. Yeah, 200 pips, that's great. So let's see if we can get something of this nature. This candle here that's closing, it is during a high volume time. It is pre-London session. So if this is our bottom, we can also look out for that. So a potential entry here, the same targets, those two potential options, right? As you can see, I just replayed the trading view. I have no idea what's going to happen. I know we're bullish. I know we're waiting for this pullback in structure. So let's see if this would play out. Okay, so you're getting that pullback. And up we go. So based on me just looking at this, it would be a loss, right? It's all about how a structure is printing. You had this pullback, high volume time, 5 o'clock, rejected this area. Now, 53 pips, more than likely you better be securing some profits or securing at least a break even. Otherwise, again, you get this manipulation. This is more than likely a bit of some news for a candle to wick like that 150 pips. That's got to be some fundamental action there. So knowing that too, you'd probably be waiting for some structure. Let's see how this looks on the 4 hour time frame. 4 hour time frame, respecting here, this is a zone. And look, so closure above, an indication we're going to start to go our way, a push, rejection from this minor zone here, back down, and ultimately direction going your way. So that's how important it is to kind of put multiple time frames into your analysis. And just because one candle closing your direction, it doesn't necessarily mean it's an automatic buy. Obviously, we replayed the markets and gave you a bit of an analysis, a bit of a direction. And as you can see from that area, from that zone, the buys worked out. So that's where it's all about, dropping down to lower time frames and dissecting the markets accordingly. To recap, $1,250 for the week. Need to make 10K within the month, hopefully. There's no time frame on the challenge, but that's a bit of my personal goal. That's going to be it for today. Keep you updated throughout the week. Ciao. Thanks for watching.